Good evening and welcome to the Philstockworld Daily Wrap-Up Show. I am Royston Bond III. With me, as always, is the lovely Miss Moneypenny.
Hi, hello world. So good to be back to talk to you this evening. Did we have a nice day in the markets?
Oh yes, it was smashing. Which is to say that the bears wanted to smash their heads in with a brick after that bogus finish. Netflix jumped $5 at the open, so, of course, we shorted them again.
You do like to short Netflix, don't you?
Oh yes, it is jolly good fun.
What moved the markets today?
The stick?
The stick?
Yes, it was a big, fat stick save that pushed the markets higher in the last hour.
Oh. Say that again. It makes me hot.
No, I would prefer to get on with the news.
Spoil sport.
No, just English.
Yes, quite. Did Ben Bernanke testify before Congress? I'll bet Ron Paul ripped him a new one.
Dr. Bernanke did testify, but not in front of Ron Paul.
What?
Ben Bernanke testified at the House Budget Committee. That was in an entirely different building, but at the same time as Ron Paul's meeting of the Subcommittee on Domestic Monetary Policy and Technology, where the tough questions were asked.
What? That seems outrageous. Who is in charge of scheduling this nonsense?
The House Republicans, they are in charge.
Oh, I see. Did they ask Mr. Bernanke their own tough questions at the Budget Committee, or was it just a big circle jerk?
More like the second thing you said. Anyway, Congressman Paul led off his hearing saying, over $4 trillion in bailout facilities and outright debt monetization, combined with interest rates near zero for over 2 years, have not and will not contribute to increased employment. In essence, Paul is charging that the central bank is enabling profligate spending by the government. The term debt monetization is a buzzword for how some poorer countries conducted policies in the post-World War II era.
Just like getting a new credit card to pay off your other credit cards. I love it.
Well, Ron Paul does not. He feels that, ultimately, the bill will come due.
Last week, Mr. Bernanke told the Washington Press Corps that, while the Fed's purchases of Treasury securities played a role in the rise in stock prices since last August, they did not affect the prices of commodities.
Oh, yes. That was a jolly good one.
But Ben Bernanke is a funny guy, you have to give him that.
Quite.
Phil had mentioned, in the Morning Alert to members that, the NYSE had a 100% line to watch at 8,362. How did that work out?
The NYSE failed to hold 8,362 and finished the day at 8,343, off by 19 points.
Is that a failure?
Not yet, but it does bear watching.
Why is Phil still bearish here? With both the NYSE and the S&P so close to matching the breakouts of the Nasdaq and the Russell 2000?
It is not so much bearish as a continued caution. With 3 of our 5 major indexes just below the 100% mark, Phil asks, what is the harm of waiting?
But waiting is so boring. I want action. Come on, Royston, give it to me.
Terribly sorry, Moneypenny. Still English.
Ah, pity.
Getting back to the stock market.
If we must.
Navy and builders jumped 5% today on news of new financing. That caused Friday's May spread to move from net 55 cents to net 90 cents, up a very quick 63%.
Oh, I do like it very quick.
I am not surprised. There was also a longer-term play on the stock that is well on target.
How about Phil's trade idea on Coke's earnings from yesterday? I see they had an up and down day.
That was perfect, actually. Phil had played for only a slightly bullish report. A net $425 trade idea jumped to $590 at the close, a gain of $165. 38% in a day.
Wow! That is much better than my 401k.
Quite.
Wasn't there also a trade idea for open?
Oh, yes. On Monday, Phil has suggested a 50-cent credit spread on open tables March $90 calls, covered by the current $85 calls. That spread finished the day even, so a 50-cent gain already, and right on target.
Oh, smashing. Were there any new trade ideas today?
Oil futures were shorted at the 87.50 line, and those made a nice, quick dollar on the day.
Lovely.
Price line February $430 puts were taken at $2.10. They fell to $1.90 at the close. A 10% loss so far.
So, Phil had short plays for all three stocks that he mentioned in the morning post?
Yes.
Well, it's not like we're keeping secrets, is it?
No. I believe the trick is in identifying how to trade an overpriced stock, more so than identifying the stocks to trade. There was also an upside play on the SPY weekly $131 calls that made a fast 15%.
How fast?
45 minutes.
My, that is fast.
Fast, but not hard.
Royston, did you just make a sexual reference? I am so proud of you.
Yes, you see, the trade made money very quickly, so I used the word fast to describe the time frame. Then I made a jest about the level of difficulty of buying a simple call as a momentum play in anticipation of the stick save, which usually comes at the close.
And now, you are ruining it. Except for coming at the close.
I thought you would catch that one. Now, please, say good night, Moneypenny.
Good night, Moneypenny.
Quite.